Hi learners, welcome to Curious Commerce. Today we will discuss the topic on working capital management. Every businesses need money for daily operations, right? Profit alone cannot run a business. That's also right. Cash decides the survival of the business. Let me repeat. Profit looks good on the paper. It means that the book profit is too good, but that profit is run the business? No. Cash keeps the business alive. Many businesses collapse not because they are unprofitable, the book profit is too good, but because they run out of the cash, end of the day, the businesses collapse. Today, we will clearly understand. First one is profit is long term. Second one is cash is day to day. Third one is working capital is the lifeblood of business. By the end of the session, you will never look at profit the same way again. Let us understand one by one. The first one is profit. Profit is long term. Profit means income minus expenses, the total income of the business and the expenses of that operational activity or the marketing activity or the total activities. The difference we call as in the profit. For example, the total sales of the organization or the company is 10 lakh rupees. The expenses, including the direct expenses, factory overheads, sales and distribution overheads, office overheads, and every overheads, including all the heads, what we uh, consider in the cost sheet. The difference between the sales and expenses, the 10 lakh minus 8 lakh, the profit is 2 lakh. Sound great, right? But wait, this profit may include this profit may include credit sales not yet collected, future income recorded today, non-cash entries like depreciation. So the profit is, once again I will repeat, sales on credit basis, future income recorded today in the books of accounts. It may be the non-cash entry like the depreciation. So the profit is on accounting concept, shows performance over time, useful for the growth, valuation, and the investors. But profit does not mean cash in hand, right? On the basis of the previous examples. That's why many companies show profit but still struggle to pay bills. Profit is like your exam marks. They show performances. It shows the grades or it gives the rank or it gives the distinctions, first class, second class, or the percentage. But they do not give you food today, right? The same way the profit. It is for the long term, but for the day to day activities of the business, you need the cash. Now, let us talk about the cash. Cash means money in hand, what we generally used the cash in hand, cash at the bag, money available right now in the organization. The cash is needed for the commitments of the organization It may be the paying salaries, paying rent, paying electricity, paying suppliers, fuel, interest, EMI, emergency expenses. On the base of this example, it is very easy to know that the cash is not about the future, cash is about the today. If today salary is due, if you're not having the cash, or if you want to pay the money to the supplier, or you need to pay the EMI to the bank, even if your company shows 10 lakh profit, without the cash, operation stops, right? That's why we say cash flow is reality, profit is theory. The third, the fundamental concept we should understand, working capital is the lifeblood. Now comes the most important concept, working capital. Working capital we define with the equation working capital equals current assets minus current liability. In simple terms, money available to run daily operations, right? It includes cash, bank balances, stock, debtors, customer who must pay you. Working capital is used for buying raw materials, paying staff salary or laborers wages, managing daily expenses, running the business smoothly. Just like blood circulates in the body, working capital circulates in the business. If blood stops, body collapse. If working capital stops, business collapse. That's why we say working capital is the lifeblood of business. Let's discuss about certain practical real life example. Some ex-person run a mobile shop. He or she sells mobile worth around 1 lakh rupees this month. His cost is 80,000, so the profit is 20,000 rupees. It is very simple calculations, right? 1 lakh minus 80,000, that is 20,000 rupees. But all sales are on credit. Customers will pay after 2 months. Today, the tax person's commitment is rent due of 10,000 rupees, the salary due for 15,000 rupees, electricity is due or around 3,000 rupees. Total immediate cash needed is 28,000 rupees. But the cash in hand is just 2,000 rupees. Now tell me, is the tax person is profitable? According to the books of accounts, yes. But can he survive today? No, because he is not having the cash. This is the reality of thousands of businesses. This is why big companies like Kingfisher Airlines, Yes Bank in earlier phases, many startups collapsed not due to the losses but due to the cash flow failures. So remember this golden line, business does not survive on profit, it survives on cash. So it again slowly for the impact in your mind, profit is pride, cash is power, cash is survival. Friends, if you are a student or a business owner or an entrepreneur, you must always ask, where is the cash? How strong is the working capital? Can this business survive 3 months without the income? Profit builds the future, cash protects the present, working capital keeps the engine running. If you understand this one concept clearly, you understand the real secret of business survival. Dear learners, The working capital refers to the funds required for day to day business activities, not for building, not for buying land, not for purchasing machines, not for the investments, but for running the business every single day. Without working capital, even a profitable business cannot function. Let us understand slowly. Working capital means money needed to keep the businesses moving daily. Just like food gives us daily energy, right? Same way petrol runs a vehicle. Blood keeps the body alive. Working capital keeps the business alive every day, like the food, petrol, the blood in our body. First use of the working capital is purchase of the raw material. A factory cannot produce anything without the raw materials. For example, a bakery needs flour, sugar, milk, etc. every day. A tailoring shop needs the cloth, threads, bobbins. A furniture maker needs the wood. A mobile shop needs the phone for resale or accessories related to that. All these require daily purchase of stock. Money used for buying this stock we call as in the working capital. If raw material stops, production stops. If production stops, sales stop. If the sales stop, leads to the business stops. It means that if the raw material shortage leads to the production gradually decreases. If the production decreases, automatically total output will decrease. The total output decrease, total sales is decrease. Total sales decrease, automatically the profit also decrease. At the end of the day, the business stops. So the raw material purchase is a critical use of the working capital. The second one is payment of wages and salaries for the laborers and the employees respectively. Employees expect salary. The major expectation is employees need salary every month on time without delay. A business may say we made profit this year, but the employees say we need salary this month. It means that we already discussed that the profit for the longer term, but cash we need for the shorter day to day activities. If you mention that we have crores together of the profit in our organization, but the employee's expectation is very simple. They need the salary every month on time without delay. Salary must be paid in cash or bank transfer, right? The salary money comes from the working capital. No working capital leads to no salary for the employees. No salaries to the employees, automatically the employees leave your organization. And the employees turnover starts, automatically the total production decrease. So end of the day, step by step, the businesses collapse. The third use of the working capital is the electricity bill or payment of electricity and utility bills. Imagine factory without electricity, office without the internet, shop without the lights, hotels without the water. Electricity bill comes every month, right? It must be paid on time. The money used for paying electricity, water, internet, phone bills all come from the working capital. These are all small expenses, but Without them, business cannot function even for one day. The fourth one is the transport expenses. Transport and delivery expenses. Goods must move from one place to another place or the production area to the market. Or we classify like goods must move from supplier to factory, factory to warehouse, warehouse to customer, customers to consumer. The transportation requires the fuel, driver, driver salary, vehicle maintenance, delivery charges, etc. All these need regular cash flows. No transportation, no supply. No supply leads to no sales in the market. No sales in the market, no income for the organization. No income, the business will collapse. Again, working capital plays a key role, right? Simple example for understand the working capital concept. A kirana shop owner, every morning he goes to the wholesale market. He buy milk, vegetable, biscuits, rice, oil. He pay cash every morning. That daily money used to buy stock, we call as in the working capital. If today he does not have 5,000 rupees cash, he cannot buy stock. Shop shelf remains empty. Customers go to another shop, sales reduce, business slowly dies. So you see, working capital is not luxury, it is for survival. Working capital is not for luxury, it is for survival. Friends, always remember working capital is the money that keep business alive every day. Building show size, machine shows strength, profit shows successes, but working capital shows survival. A successful business is not one with the book profit or the one with the big profit or the book profit. It is one with strong working capital management. Thank you all. If you need the daily updates about the commerce, follow Curious Commerce Financial Management Hub in WhatsApp. If you like this video, share, subscribe, and like. The working capital management will be continuing the part second. Thank you all.